morning, it's Sarah from Y Advice. I'm just here with Anthony Landahl from Equilibria Finance. Today we're going to do a short piece on investor behaviour through COVID and what we've been seeing with our clients and within the market.
G'day Sarah, very nice to be here. Yeah, it's been an interesting 12 months in both the liquid investment market and for property investors. So it's a really interesting topic around what we've both been seeing. What have you been seeing from your perspective in terms of the liquid investment market?
Well, I guess one thing to note was, the severity of COVID and the impact that actually had on the market. Within a few weeks, we saw a 30% correction within the markets, which really did spook a lot of people. Lots of people were worried, they were fearful, they were scared. We all thought we were going to go into the next war. And that really had a big impact on, I think, people's psychology. But one thing that we've seen from then, over the last 12 or so months is the rebound in the markets. The amount of stimulus that we've seen both here in Australia and globally is just phenomenal. It's something we've really never seen before, and it's had a huge impact on the markets, both, overseas and here. We're now sitting at levels above where we were before COVID. And that's just a testament to the amount of money that's been thrown at this issue.
Well, I guess as well that in such a low rate environment, people were sitting on cash for a while, pulling money out of the market, but then they're looking to find places to put that cash in an environment with such low rates.
Exactly, yes. Yeah, so I think with the low rates, the factor of the low rates, if you're putting money in a bank account these days and thinking it's safe, it's not even keeping up with inflation. So how is that safe? So I think that's definitely having an impact on investors. People are wanting to find a return, and with the stimulus and COVID, it's really just boosted that those investors in the liquid markets. What are you seeing in the property market as a result?
It's interesting. Investor behaviour's been very subdued. I think when COVID started, investors were waiting for the next opportunity. They thought that the market was going to drop. It's a very behavioural game, the investment property, I guess. So they were looking for the market to drop, and it didn't. Essentially, the market's been driven by owner-occupiers, by low rates, by incentives for home buyers, and that's driven a real surge in property prices. So from an investor perspective, they have been sitting on the sidelines. However, what we've been seeing is quite interesting. For an investor in property, core to their strategy is cash flow. And leveraging into the next property. So what we're starting to see a little bit of now is a change in investor behaviour around the sort of properties they're looking for. With people working from home, with people working in the regions, there's other areas that are becoming more attractive for investors. We're also seeing investors getting properties revalued, and they're repositioning their strategy. They're looking at, what equity do I have? Can I get this equity out in this low rate environment? And then when the right property comes up, I'm in a position to buy it. So we've gone from property investors being quite subdued, hoping that the market would drop. It hasn't, but now they're repositioning their strategy around the type of properties they're buying, where they're buying them, and also looking at revaluing existing investments to see what equity is there to leverage into the next property so that they're ready to go. The main thing with any investment in any asset class is remaining disciplined and keeping the emotion out of it. So even for property investors, we're seeing a lot of them sitting on the sideline, waiting for that opportunity.
Well, I think a lot of what's driven a lot of investment decisions over the past 12 months because of this COVID and the stimulus has been the fear of missing out. People have...
We're certainly seeing that with home buyers.
Exactly. We've seen COVID and people have thought, you beauty, it's now another GFC. Let's jump back into the market and, and take this opportunity. And I think that's really kind of been adamant with any asset class over the past 12 months. I've had people coming in here worried that their children are going to miss out on getting into the property market here in Sydney because the prices just keep going up. And, that's an element of, people getting fearful that, they're going to miss out if they don't do something. So you always have to be fairly cautious if that's what's driving a decision.
And we are starting to see a little bit of a slowdown in the market with the actual growth in prices outrunning growth in people's income and outrunning their ability to pay the deposit. So it's been an interesting surge in the property market, but we are starting to see that investor behaviour pick up again, and we're starting to see investors having positioned themselves for the right opportunity start to come back in the market. So that's a good sign.
Definitely, yeah. Even in the liquid markets, other than the fact that there is some level of worry about inflation because of the stimulus, we've started to see bond yield, like 10-year bond yields started to pick up slightly. So I think there is some optimism now that that over time, nobody kind of knows exactly when, but interest rates will start to rise at some point.
Yeah.
And, that means the value of your cash is starting to become a little bit more, valuable. So I think because of that, people are probably a little bit more comfortable starting to invest again, building up that cash flow, considering those options.
Yeah.
Because there is that hope on the horizon that, that will have value in the future.
Yeah, so it'll be an interesting 12 months with a very interesting 12 months behind us. Thanks, Sarah.
That's all right. Thank you so much for your points, Anthony. It's been great chatting with you.
No problems at all. Cheers.